chip. And Oracle, they failed to deliver everything that analysts were looking for in their report. On the economic front, Fed watches waiting to see inflation reports this week. CPI, get that tomorrow. Thursday is the producer price index. In the meantime, economist Kathy Bostjancic at Nationwide says the U.S. can still sustain solid economic growth going forward.
That's our forecast. We do see a little bit of moderation, but still underlying firm economic growth as we end this year, and more importantly, going into 2025.
Right now, the S&P 500, 10 points higher. That's up 0.2%, 6,062. The Dow Jones Industrial Average is down 23 points. The NASDAQ 100, 82 points higher. That is up about 0.4%. Some statistics from Hiring Lab, Indeed Hiring Lab. The share of job vacancies requiring a college education falling to 17.6% from about 20% back in 2019. So that represents tens of thousands of more jobs potentially available for the more than 60% of Americans who didn't graduate from college. But I kind of don't like these stories because it says it's okay not to get a higher education.
That's what my daughter says sometimes. She's like, well, I don't have to go to college. I'm like, oh, you're going to college. Like, who's
whether you like it or not.
Yeah, whether you like it or not, you're getting a degree.
I mean,
where is up for grabs?
You get the degree, okay. I was a science major.
Aw.
Do I use that now?
Yes,
Not really.
You do in your critical thinking and analytic skills.
Oh, okay.
Wow.
Is that what I do?
Yes. Oh, but you know what? You build stuff. Like, they have to be related, right?
Yeah, that's kind of sciencey.
Yeah, no, I'm serious. He builds things, right? Like, he turned a closet into a bathroom,
an evil
which
scientist.
I thought was really weird, but he did it anyway. He did it all on his own. He has, like, a garage full of stuff that builds
And what's
things.
on your Christmas list this year?
Oh, yeah.
The
Power Saw?
22-ounce framing hammer.
There you go.
That's all I want for Christmas, really.
Cool, cool. Okay, we're going to look that up. 22, what was it? 22 ounce
Framing
hammer. All right, cool. Thanks a lot. We appreciate that. Okay. Anyway, back to Paul's problem is the refinancing.
Yep.
The 30-year mortgage rate still really high. It's got to get into the fives before he thinks about refinancing. So we wanted to get some more data here with Erica Edelberg, a Bloomberg Intelligence chief mortgage-backed securities strategist. Will Paul refi next year?
Hi, good morning.
Morning.
Not to put me on the spot. Well, you know, that kind of depends on what happens now with inflation, for instance. And I think a lot is up in the air with the new administration as to what direction inflation will go. Unfortunately for Paul, even if the Fed keeps cutting rates, mortgages are a lot more dependent on the longer end of the yield curve. And that's going to be about what the Fed does over the longer term. So that might keep rates a little bit elevated next year if inflation stays supported as we are concerned it may.
Back in, late September, we did get the 30-year mortgage close to 6%. Did you see refinancings in that time frame?
We actually did. Most of the loans were originated over the year before that, including especially last year when rates were even closer to 8%, were suddenly in the money for the first time. And we did see what, if you only looked at those higher coupon cohorts, was actually one of the fastest waves we've seen, in really since pre-financial crisis.
Wow.
Yeah, so, but you really had to go for conventional loans, that would be way up to like 150 basis point of incentive. For Ginnie Maes are super fast right now because they're being offered very low, relatively low rates for streamlined refinancing, even lower than what they're being offered, like the VA loans when they first purchased the homes. So we've actually seen speeds upwards of 90% on an annualized basis of those loans actually refinancing.
Wow. So does it matter sort of how long the Fed cuts for, or as in like how quickly the Fed cuts, or just the level that they get to? Like, which one kind of affects the zeitgeist more?
I think what we're concerned is that they won't be able to cut rates very far. We think maybe they can get to 4% over the next year or so. I mean, I know the, R-star or whatever it's called is still below that. But
I keep hearing 4% from people too now. I feel like that's being
so if you're going to have short-term rates kind of floored at 4%, then you can't really expect 10-year treasuries, which are currently around 4.25, to go a lot below that either, unless you're expecting a recession, in which case you're expecting that eventually the Fed will have to cut faster. That's not our base case.
So the Bloomberg U.S. mortgage-backed security total return index positive 3% and change this year. So folks in your market getting some return. What's the expectation for next year?
For next year, the good thing about mortgage-backed securities and rates in general, the longer end of the yield curve, is that they're still relative to, say, the past several years, there's still a decent amount of yield. So just from a yield and carry perspective, we think returns could be decent. I know at the beginning of this year, we thought that there was probably going to be a recession, and we thought that rates were going to get cut a lot faster. We thought the Treasury was going to end well below 4%. Actually, I think we even had like a 3.22 on there as the 10-year yield. So we had predicted double-digit type of total returns. We don't expect that at all in 2025 now. We think we've hopefully dodged a bullet in terms of a recession. So, we're calling for rates maybe just below 4% next year. That probably puts total returns a little bit above the yield levels. So, 5-6%, hopefully.
What else is on your docket right now? Like, what else are you guys focused on in terms of what the mortgage market brings in 2025?
Well, we are in the middle of our 2025 outlook, so the only part we haven't done is actually the return part. but we've actually done the supply part, and we think both net and total supply is going to be a little bit higher next year because the housing market is improving a little bit. It's all marginal.
So what data do you look at for that? Is just more units being built? Because I don't see...
More units being built, yeah.
Okay.
And that just by itself brings in a little bit more net supply.
Right.
Yeah, it's really just based on that. But I mean, we're talking like 20 billion more, like if we're going from like 225 up to 245 billion net supply, total supply, and then agency mortgages. Total supply is going to be more like, 1.2 billion as opposed to 1.1 billion. And then you take out prepays and refinancing and relocations. So we have done that part. We also are actually pretty concerned about, and again, this is your favorite thing, Alex, the negative convexity of the mortgage market.
Yeah, bring it. That was my next question.
Yeah, because we're concerned that, with how much loan sizes have grown because of home price appreciation, and also just the rising share of non-bank servicers that are really hungry for business. We think that any little dip in rates does get taken advantage of to the extent that it can be. So people are going to refinance, the people who are in the money to refinance, which is a relatively small portion of the loan, but it includes new productions. It's where new supply is, has a lot bigger refinancing risk for when rates do dip even a little bit. Offsetting that a little bit is a lot of those are first-time home buyers, because people who have repeat buyers, actually, if anything, some of them are paying more cash and things. So not that it's affordable for first-time home buyers to buy into the market, but they are the ones taking out mortgages right now more than, let's say, repeat buyers. So that's a little bit of an offset, because if you just plunk down a chunk of change to buy a house, you might have to wait a little bit longer to be able to refi in terms of having the cash to put down. But, in any case, we do think that the negative convexity in the mortgage market is worse now for new production, so we think spreads should be a little bit wider to compensate for that.
By the way, there's some great videos explaining convexity on YouTube.
Really?
Seriously.
Really?
Oh, yeah.
Okay. I'm going to check that out.
So you get your degree in
Negative
science,
convexity.
and you start trolling around the internet for videos on bond convexity.
Yeah, see,
For those who don't want to go on YouTube, bottom line is that it means that when rates rally and mortgage prices fall, mortgage prices fall even more than other rates, because
but that's negative convexity?
That's the negative part. So that's what happened in like 2022, 2023.
The sensitivity is just higher.
Yeah, and then the opposite way, if we do have a nice rally in interest rates, because your mortgage is going to prepay, you're actually not going to get the full benefit of rates rising. So, prices rising. So, bottom line is the mortgage investors are compensated for the fact that the people refinance as soon as the prices are supposed to go up.
We got it.
Got it.
All right, Eric Edelberg joining us, Bloomberg Intelligence, Chief Mortgage-Backed Security Strategist. Coming up, the head of global recycling over at Glencore. It's going to be a great conversation, so tune in for that.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economic, and finance through our lens of our Bloomberg Intelligence folks. And if we're lucky enough, sometimes we get to tap the amazing C-suite outside of Bloomberg Intelligence and get their take on the real economy and what's happening with their business. We're fortunate enough to have one of them with us right now. So for those of you who don't know, Glencore is a metal behemoth. They basically produce and trade all the metals that everyone needs in daily life, whether you're looking at a transition metal like lithium or something straight up like copper. They also have a recycling business that may be lesser known. They like to recycle end-of-life electronics, lithium-ion batteries, and other critical metal-containing products, which will be key, by the way, in the energy transition as we just run out of the stuff in the ground. So we're lucky to be joined now by Kunal Sinha. He's a global head of recycling over at Glencore. Kunal, thanks for joining us. How has the Glencore recycling business changed over the last sort of few years? Like, where were you guys? Where are you guys now?
Thanks, Alex. Thanks for having me. Yeah, I think it's a less known part of Glencore. I would say over the last 4 or 5 years, it's changed in a few different ways. Increasingly, the recycling, if you think about recycling, traditionally is a very linear sort of value chain activity like everything else used to be. I think it's headed more towards a circularity sort of concept. So we'll still be recycling, but the focus is how do you put those critical metals that you recycle back in the loop into the battery supply chain or the auto supply chain, or copper back into the green manufacturing supply chain. So that's sort of one change. And then the other change is we are pretty substantially present in the copper value chain. We recycle things like end-of-life electronics. We've been doing that since the 80s. We've been recycling lithium-ion batteries for 20 years. I think the other thing that changed is we made a lot of investments in the lithium-ion battery space, especially recognizing the need to recover lithium, the need to handle large battery packs, the need to address the fact that there will be a lot of gigafactories that already are and will be that will produce a lot of scrap. So just keeping an eye on the industry and how it's changing, and hence how our recycling business needs to change to address. And then some of the more near-term recent areas that we are adapting to are recycling of solar panels, recycling of electric motors from electric vehicles. So we're always keeping an eye on the next big pile of post-consumer stuff that comes along, and we'll make sure we stay ahead of the game in terms of getting it and recycling it.
Can you give us a sense of to what extent kind of just industry-wide recycling is impacting the supply of the metals we need and use?
Yeah, I think it varies by metals. If you look at copper, which is a bellwether metal and very heavily talked about, no matter whether you look at the green aspect or energy transition or just simple AI, which will need a whole huge amount of electricity, and hence the grid, copper is always in need. If you look at copper, it's roughly a little less than 30 million tons a year of refined supply, 28, 29. Of that, already about 6 to 7 million every year comes from recycled sources. So it's not insignificant.
Yeah.
When you look at some of the other metals like nickel, cobalt, lithium, they're not as far along as copper, but there had been a lot of push. So those metals, the recycled portion is coming, especially in cobalt. There's a lot of recycled supply now. So it's a function of how important the metal is, how much post-consumer and post-manufacturing feedstock is on the market to be able to be recycled. Mm-hmm. So copper just benefits from being a very mature and old sort of, if I can call it, metal. Some of the newer metals will get there with time.
Kunal, is recycling for Glencore a profitable business?
Yeah, it's a good question. For us, yes, it's a profitable business. We've shared some numbers in the past. I mean, through the cycle, we make somewhere between 200 250 million EBITDA contribution from our recycling business, which is recycling a whole bunch of these things. Of course, compared to Glencore's own EBITDA, that's a very small fraction. But if you look at any independent recycling company, I think you'd be hard pressed to find too many with that level of profitability as a pure play recycling company, right?
Any reason to believe that the recycling, I guess, trends in the metals business broadly defined, will that change with the new administration coming in, do you believe?
Don't think so. I mean, we've been looking at recycling in North America over the last, 30, 40 years. So we've been through a lot of changes in administration policies, lens. I mean, the good thing about recycling is it's truly an evergreen business. It hits some good policy points on both sides of the aisle. I think if you look at where policy priorities seem to be headed, it's a profitable business. It will create a domestic source of critical minerals. It creates domestic manufacturing jobs. We have discussed the importance of things like semiconductor and electronics manufacturing. They go to national security issues. So there's a lot of tailwinds for recycling that I think would align well with where policymaking is headed in the U.S.
In just 30 seconds, can you tell me what kind of price you might need for copper for recycling to be profitable, and if that's lower than the actual mine cost?
So, funny enough, I mean, the actual copper price doesn't really matter so much. It does matter when you're buying, let's say, very high-grade copper scrap. Mm-hmm. We tend to not do a lot of that. There is this phenomena where when the copper price spikes, there is this notion that some secondary supply will come into the market. And that's just because there's a lot of yards sitting on a lot of material with that price, it's opportunistic to now sell it, right? But it behaves more like copper concentrates, if I can draw a parallel, where it's more the TCs, RCs that matter, not the metal price.
All right, we gotta leave it there, Kunal. Thanks a lot. Kunal Sinha is Global Head of Recycling over at Glencore. Much more coming up in the next hour of Bloomberg Intelligence. Happy Tuesday. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We have a great hour lined up for you right now. We're going to take you down to Brazil and see what's going on with President Lula. He is apparently awake after emergency brain surgery. We'll take you there and get a reporter on the ground to see what's going on there. Plus, David O'Reilly is CEO of Howard Hughes. We're going to break down the commercial real estate market with him. Plus, Omnicron CEO and Interpublic CEO will be speaking with Bloomberg Technology, Caroline Hyde, the anchor of that show later on in the hour. We will also bring that to you live. And it's Tuesday, so we're going to talk about little carbon markets because we just did recycling. So, carbon markets, here we come with Bloomberg BNEF. But let's kick it all off for you right now with John Tucker in a Bloomberg Business Flash.
All right, major averages, they have turned higher, not by much, but they are higher. You have 6 of the 11 major industry groups in the S&P 500. They are up right now. Communication services in the lead, and that is where you're going to find Google parent Alphabet. Alphabet shares right now up 3.3%. They've been talking up their Willow quantum computing chip. Real estate right now, that's the worst performing group in the S&P 500. You had Toll Brothers' first quarter outlook. That was kind of disappointing. Those shares, they are lower as a result. Oracle continuing to drag in the overall market after posting disappointing growth. Investors also looking ahead to the Fed meeting that's next week. And leading up to that, we're going to get inflation prints this week. Tomorrow, the CPI, the day after that, PPI, that may dictate the future course of interest rates from the Fed. Meantime, former Bridgewater CIO Rebecca Patterson remains bullish of stocks.
I do think the bias for the market into early next year is going to be higher on this momentum and the fact that at the end of the day, we have a strong economy. The Atlanta Fed GDP tracker is showing growth in this quarter running over 3%, which is quite robust.
S&P 500 right now, 5 points higher, 6,057. The Dow Jones Industrial Average, 33 points higher. The NASDAQ 100, 18 points higher. 2-year yield, that's on the move. That's up close to 4 basis points, 4.16 right now. The 10-year up 3 basis points. That is at 4.23. Talking about commodities, I kind of failed to mention this. This is probably the most important commodity in my world. Coffee prices reaching a record high You have concerns over a global supply crunch.
Apparently, the where you grow coffee around the globe is like this band.
Because of weather.
Yeah.
Right temperature.
And it's kind of been an issue.
But on the flip side, so Robusta beans have been doing really well in Vietnam, but that's sort of like instant coffee.
Okay.
Yeah, and Arabica is the fancy stuff you get
Arabica.
at like Starbucks, and that's from Brazil. Not the only country, and Brazil has had an issue over the last 4 years with their weather.
I just go right upstairs and get free coffee. So.
Yep, thank you, MRB.
Yeah, no, we appreciate that, but that's going to get maybe more expensive. All right, JT, thanks a lot. We appreciate that, Bloomberg Business Flash. Let's dig a little deeper into some of the movers here. John Tucker in the last hour was pointing out sort of the have and have not of technology, and that's Alphabet versus Oracle today. So Nora Melinda joining us from Bloomberg Equities Reporter, breaking it all down. So the difference stark.
Yeah, I mean, Alphabet, ticker GOOGL, it is on a roll. I mean, we are seeing shares have pared their gain, but they were up as much as 6.3%. That's the most intraday that we've seen since October and the highest intraday since July. Now, this is after the company announced a major development in quantum computing, and this is all surrounding its Willow quantum chip. Analysts have really praised this breakthrough. They're saying that it's a long-term catalyst and it demonstrates Google's technology leadership. So, of course, as they've really been competing against a bunch of their competitors, trying to really push forward in this space, this is some great news for analysts who are tracking the stock.
All right, good news for our friends there. What else you got?
I'm also keeping an eye on Alaska Air. I mean, this is a company that has jumped the most in 4 years, and this is after it reported its expansion across the globe. It's actually planning a dramatic global expansion, and that'll start with flights from Seattle to Asia in 2025, and that's growing into 12 new overseas routes as well. But the company also unveiled plans for a $1 billion share repurchase program, and so that's really been pushing the stock along. We have Morgan Stanley saying that short, medium, and long-term targets unveiled ahead of the Investor Day are likely to come in well ahead of expectations. And it seems as though they're laying the groundwork to become the fourth, quote-unquote, legacy, or more appropriately, a transcontinental mainland carrier. So I think that's pretty positive coming from Morgan Stanley.
Then you get an upgrade for American Air today. You also have IATA coming out with some pretty positive read-through on air travel. It's like a good airlines day.
Definitely.
If you look at it that way. All right, Nora, thanks a lot. Thanks so much. Nora Melinda joining us, Bloomberg Equities reporter. The other really amazing story that we've heard over the last 12 hours is what happened over in Brazil. So President Luiz Lula underwent emergency brain surgery and is now awake and conscious in the ICU. Apparently, he'll stay in the hospital for about 48 hours. We wanted to get more on this on the ground with Danielle Carvalho, Bloomberg government reporter. Can you just walk us through the chain of events that has happened and led us here and kind of what this does to the government?
Hey, how are you? Well, Lula, in October, Lula was at home and he fell and hit his head. After that, he was submitted to some exams. He was doing well. But last night, by the end of the day, he started with some headache and he decided to go to the hospital here in Brasilia, the capital. And after some exams, they found there was a hemorrhage and decided to transfer him to São Paulo, where you have a better hospitals there. And he underwent a surgery. In the morning, they announced much more complex surgery, craniotomy. But then at the presser, they explained it was trepiding, where they use a drain to drain the blood that was between the skull and the brain. And doctors say he is now well. He will spend 48 hours in the intensive care unit, but he will spend the whole week at the hospital just for precaution.
Was there an actual transfer of power to his vice president during this process?
No, Geraldo Alckmin, his vice president, he was in São Paulo. He would have some agendas there, but he traveled back to Brasilia, and he will replace Lula and host in Slovakia's Prime Minister Robert Fico, who's here today, but as a vice president. So Lula, there was no transfer of power yet.
But nevertheless, when you see these headlines, it does come as quite a shocker. What is the political backdrop, economic backdrop of Brazil right now?
Well, Lula is a 79-year-old man. He will be 81 in 2026 when he intends to run again for president for a fourth term. And what is happening now, what happened in October and what happened today brings us a big question mark on his political future. Will he be able to run for president in 2 years? And age became something very difficult in politics, especially after what happened to Joe Biden in the United States. And there isn't a clear successor for Lula in Brazil. There are some people that brings the name of his finance minister, Fernando Haddad, and actually he is having some lead in the country. 2 weeks ago, he was the star of address on TV to announce a spending cut package to the nation.
All right, Danielle, thanks so much. Yeah, thank you so much, Danielle. We appreciate getting your reporting there. Danielle Carvalho, he's a government reporter for Bloomberg News in our Brasilia bureau, which I forgot was the capital of Brazil. I would have just said Sao Paulo or something. But Brasilia, I did not know that. So there.
This is why we have a global team.
It had moved in previous decades.
Did it? Okay. Because I would have just said Sao Paulo. Okay, or even Rio. What do I know? All right, let's get back to, the other news story that is certainly transfixed, I think, not only New York City, but kind of the country here. And that was the murder of that senior executive of United Healthcare. And now we have the arrest and charging of the suspect. Michelle Cortez joins us here, Bloomberg senior editor covering healthcare. Michelle, we've seen all the news. We've seen the tape. We now have a murder suspect. How about from the other perspective? How about the perspective of the company? How's the company been reacting to this news? Again, the tragic loss of one of their senior executives. What have we heard from United Healthcare?
Well, it's absolutely been a crisis for the company. It's a crisis not only in terms of the individual person, right? They have lost a senior executive, so a person that many of them were close to. Also, they have a hole for the company that they need to fill, but also there's this huge groundswell of animosity towards the industry, and they have to grapple with that as well. Honestly, what we have heard from the beginning is that they were shocked when this happened. I don't think this was on anyone's bingo card for 2024, and they just didn't know how to react initially when this happened. The first things that we saw was, increased security at the United Health campuses in Washington and Minneapolis and in New York, and we have seen them taking executives off of their web pages, that type of thing. But in terms of actual communication to the outside world, there's been exceedingly little from United Health, and even internally, some of the reports that we have seen have essentially downplayed the situation and told employees to not really pay attention to social media, to not take this outpouring to heart. They do have an awful lot of work that's going to have to come. They have not yet done it, and it's going to be interesting to see how it plays out. There's really not an awful lot that they can do at this point, given how much antagonism, animosity, and straight up hatred towards the company from people who have suffered in terms of not being able to get the kind of health care and coverage that they've needed. I think that it's been really shocking for many people.
Which is so surprising, because you would have thought when you have a tragic event like this, it would be the opposite, that you'd see an outpouring of support, right? And that's just not been the case. How has it reflected in United Health, but also just in other companies as well? Like there was a debacle with Anthem last week and paying anesthesiologists.
Right, absolutely. This is not something that's specific to United Healthcare at all. It is something that comes from the health insurance industry. Obviously, the way these companies operate, they do, when you talk to them about it, what they're doing is they're trying to make healthcare more efficient, more affordable, making it possible for people to get access to the care that they need. But in fact, the way that a lot of them make money is by reducing the expenditures for healthcare insurance. And that, again, not specific to United Healthcare. We've seen other companies dial back their in-person appearances. They've had executives pull back events that were going to be public, that were closed, moved online. Everyone is reevaluating their security at this point, and the way that they move forward at this at this point is just uncertain how you can actually rectify something that is systemic to the industry. This is how it operates. So they're going to need to rethink, and how they go forward, I don't think that they know yet. They're still trying to figure that out.
Red headline just crossing the Bloomberg terminal. Saudi's PIF said to near deal to invest in PGA Tour enterprises. So we'll have some more reporting on that for our golf fans out there. And Michelle, I think when this news first broke, we said, the headlines were United Healthcare CEO, but we came to learn later that it was a CEO of a subsidiary, not the overall global CEO. And some people were saying, how could a CEO not have security? But again, he wasn't the CEO of the entire corporation, just of a subsidiary. I guess they have to rethink some of their security for some of their mid-level executives and leadership as well.
Right. Well, so Brian Thompson was the CEO of United Healthcare, which is not United Health Group, right? It is the insurance subsidiary, which is the biggest of United Health. If you actually line that up with other S&P companies, it is one of the biggest. It would be independently. It's kind of like, the economy of California or Texas. It's a massive, massive company. He made $10 million a year. I mean, this is not a small, low-level person. It is shocking that he didn't have any kind of security. Many people don't have security. I mean, you can drive up to his house. I used to just live down the road from him in Minneapolis. It is a lovely, lovely home, but certainly not gated, no restrictions around it. And I don't think that people in this industry realized the animosity. And again, no one thought that this could have ever possibly happened. And so, not maybe low-level employees. Certainly, I think everybody who's affiliated with the industry at this point is rethinking their own security, their own, morality, their own, how they're working forward with what they do professionally. But in terms of security, this is an area where everybody is reaching out now. They absolutely have to get this squared away.
Michelle, what could be changes that the industry could take to sort of mitigate this animosity? I'm sure we could list a lot of issues, but what's a main issue that needs to be really looked at and corrected?
It's such a good question. It really does go to the fundamentals of the industry itself, though. The way that it works is insurance companies put up hurdles to make sure that people are getting the appropriate care and only the care that they need. And sometimes the argument is that they're going too far. And we're seeing these reports coming out on social media, people talking about how they haven't had access to care, how they have been turned down for policies for their kids, their family members, their loved ones. There was a huge outrage about how United Health particularly was using artificial intelligence to turn down insurance requests, and then they make people and doctors jump through these hoops over and over in order to get access to these kind of, what many people would say arguably are things that should be covered, and it is just part of the process. Now, we could certainly see some type of a reconsideration of that. I don't know that they would want to be doing anything like that in this current moment, right? You don't want to actually respond in any way that might be giving kind of fuel to the fire of the people who are coming out against the industry. So I would imagine, in the weeks and months to come, we might see some kind of a reaction in terms of prior authorizations, in terms of denials, in terms of appeals, in terms of these boards that they have that are set up to actually evaluate whether people should be covered or not. All of those things, I'm sure, are going to be under consideration.
All right, Michelle, thank you so much. We appreciate that. Michelle Cortez, a senior editor covering the healthcare for Bloomberg News, coming to us from our Washington, D.C. bureau. You put up the stock of United Healthcare. UNH is the ticker, and it's pretty much unchanged here today, up about 6% year to date. But if you just look over the past couple of days, certainly it has sold off here a little bit. So again, some definite concerns about the state of how folks view the healthcare business, and it's mixed at best.
Yeah.
You could say, hey, we had the good days of big healthcare, big pharma finding a vaccine for the pandemic, but then you've got so many more countless stories of situations where people have either been denied coverage or not getting the proper coverage or reimbursement and all those types of things. But certainly puts that discussion forefront here.
Yeah, we'll obviously keep you updated on any headlines that cross. Back to that breaking news that Paul gave you just a few moments ago. Saudi Arabia's public investment fund, PIF, is nearing a deal to acquire a minority stake in PGA Tour Enterprises. This is according to people familiar with the matter. Some of these numbers that were huge. The Sovereign Wealth Fund could take roughly a 6% stake in the commercial arm, and the investment could actually value PGA Tour Enterprises at about $12 billion, which feels like a big number for golf.
It is a big number, but the most important thing is to get these two tours back together, live in the PGA Tour.
Sports. All right, coming up, much more. We're talking about commercial real estate with CEO of Howard Hughes. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker at the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks right now, the major average is a little change. Investors might be on hold until we get this week's inflation reports. That'll give us some clues about the future direction of interest rates. Of course, the Fed is meeting next week. Alphabet, right now, those shares are up just about 4%. the parent of Google, discussing breakthroughs made through the use of its new Willow quantum chip. And then you have worst performing stock in the S&P 500 sinking over 7%. That would be Oracle. Its results failed to inspire. And then Treasury yields rising slightly. There's an auction today, $58 billion sale of 3-year notes. S&P 500 up 3, the Dow 8 points higher. And again, the NASDAQ 100 right now 26 points higher. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. That's kind of where you find us. You know, we love to talk about the real estate business on Bloomberg Intelligence, both commercial and residential. Fascinating business, undergoing tremendous change over the last 7, 8, 9 years. David O'Reilly joins us once again. He's the CEO of Howard Hughes, and Abigail Doolittle, Chief Markets Correspondent for Bloomberg News, joins us as well. David, we spoke before, you guys at Howard Hughes. Tell us about, just explain to us once again, your business. Where do you play in the residential real estate business?
So we play across all aspects of the residential real estate business and the commercial business as well, where we basically build small cities. We play Sim City every day, where we acquire massive amounts of land, land that is often 2 or 3 times the size of the island of Manhattan. We put in the roads, water, sewer infrastructure, sell the land to home builders, residents move in. We use the capital from selling land to home builders to add the commercial amenities, retail shopping centers, office buildings, multifamily. And we have a unique influence over the long-term generational planning of these communities that's allowed us to thrive for the past several decades.
And so just the one I know of, Abigail, is the Woodlands in Texas, because I play golf down there. I have a friend lives down there. You guys created a city practically, a fully functioning with everything there.
Absolutely.
I don't know how that happens.
That's what we've done across the country.
Jersey, I don't think.
Actually, the first master plan community was built in Columbia, Maryland, between D.C. and Baltimore, and it's one of the assets in our portfolio today. Jim Rouse, who also invented the mall, was the inventor of the master plan community.
Wow. Yeah, I'm looking at all of your communities here in Texas, 3 communities, one of them, to Paul's point, about 150,000 people. You know, I grew up in Albany. This is the capital of New York State, one of the central hubs in the entire world, and that one community much bigger. And then Arizona, a community is being planned. Nevada, you have 127 residents in Summerlin, Maryland, Columbia, that you're talking about, founded in 1966 with 112,000 residents there. And then Hawaii, which I know won the Master Plan Community of the Year, 60 acres, a lot of retail, and a lot of condos. So you have touch points right across the economy. That's what I think is so interesting. I know that you have a lot of conversations on home building, but you're also, one of the biggest jobs you're doing is bringing in the employers to then attract the residents that will come in. Talk to us about the general buzz out there and what types of employers are most attractive to your communities and your present residents and your future residents.
So there's a lot in that, Abigail.
Yes, there is. I packed it in.
Well, look, so one of the biggest catalysts for any community is jobs. So I spend a large amount of my time out on the road recruiting companies into any one of our communities. In Houston, it's easiest to recruit oil energy companies because it's the energy capital of the world, and we're around NASA, and there's an incredible population of technology workers there as well. In Summerlin, Nevada, we're working right now with Sony Productions to build a movie studio in partnership with Sony and Mark Wahlberg, because we think that industry is highly synergistic to what is the largest industry in Las Vegas right now, which is the Strip and the entertainment industry. So trying to find those companies that can find that well-educated, lower-cost workforce that want to come into our communities is first and foremost. It's been a big shift. Early in my career or when I was growing up, Mom and Dad would put the 2.3 kids and the dog in the wood grain wagon and drive to where the jobs were, because we had to chase the jobs, because companies dictated where we were going to set our headquarters. Today, companies have shifted, and they're following that well-educated, lower-cost employee base that's migrated out of these big cities post-pandemic. And we see companies coming into Texas, into Houston, into Summerlin all the time in droves, chasing that workforce that left the big cities during the pandemic.
So how hard is it to manage the supply part? Like, what's the biggest obstacle?
Actually, that is one of our greatest competitive advantages, because we're selling land to home builders only to keep up with underlying home sales. trying to give them just enough inventory to keep up so that we have enough homes to keep prices low, but not too much land in the hand of home builders, because if the market turns, they'll make a terrible decision and devalue the rest of my land, and I can't have that. We have that same philosophy with our commercial development as well. Today in the Woodlands, we have 8 multifamily properties. We're about 96% leased. I need more multifamily assets. So we're able, as the largest owner of commercial land within our communities, to control new supply as it comes on, only building to meet demand, never building for building's sake.
How do you finance this stuff?
Combination of property level construction loans that we take out with long-term mortgage financing, and we do have corporate bonds that we've executed in the leveraged finance market.
So Howard Hughes, of course, is a publicly traded company. Your largest shareholder is somebody that Bloomberg cares about a lot, Bill Ackman, Pershing Capital, and recently, or Pershing Square, excuse me, in August put out a filing of wanting to potentially take Howard Hughes private. What can you tell us about this?
I really can't talk about Pershing's intention, and that's really a question for Bill Ackman.
So look, maybe we should have Bill on.
Yeah, absolutely. Look, I think that if Bill were here, he may share my view. I think that his perception of the value that exists in the Howard Hughes Corporation, the opportunity to create generational wealth over decades, is unparalleled, and that's probably why he owns 37% of us today and wants to own more.
All right. Hey, David, thanks for stopping in again. Really appreciate it. Fascinating business model. Really appreciate getting the updates there. Summerlin, Woodlands, some amazing properties out there. David O'Reilly, CEO of Howard Hughes. And Abigail Doolittle, Chief Markets Correspondent for Bloomberg News, both joining us here in our Bloomberg Interactive Broker Studio, getting the lowdown on kind of some of those planned communities out there, which have been so popular with so many people. Coming up in just a moment, we're going to bring you a conversation with Bloomberg Television's anchor, Caroline Hyde. She's going to speak with Omnicom's CEO, John Wren, and Interpublic CEO, Philippe Krakowski. Remember, yesterday, these 2 big ad agencies announced an acquisition of Interpublic by Omnicom, creating what it will be the largest ad agency in the world as these companies position themselves to compete against the big tech players that are coming into the advertising space like Amazon, Meta, all those kinds of things. Let's take a listen to this conversation right now.
Back to Bloomberg Technology. I'm Caroline Hyde in New York. We want to welcome our TV and radio audiences worldwide now to Bloomberg Technology because Omnicom has announced that they'll be buying Interpublic Group in a move that will create the world's largest advertising company with an annual revenue of more than $25 billion. Here to discuss in an exclusive interview, John Wren, Omnicom CEO, and Philippe Krakowski, Interpublic Group CEO. Gentlemen, welcome.
Thank you, Caroline. Thank you.
John, I'm sat here on the technology show thinking about the technological disruption that has happened to advertising. Is this in response to that? Is this to take on Alphabet, Meta, and claw back more of that global revenue?
Well, it is. Technology does play a role in this, and both Philippe and I have focused on that in our conversations over the course of the last year. When you cut through quite a bit of what we're discussing, if you look at our industry, 5 years ago, 10 years ago, the barrier to entry was very low. It was, you just had to be a brilliant person, right? With a great
Just a bit of brilliance.
Yeah, with a great idea. Now, in order to properly service clients in this new era, it's key to have those very, very bright, very talented people, but it's incumbent upon us to enable them with the best tech and data that we possibly can for them to garner the insights, the information at scale so they can react to the environment as they need. And we've each been on that journey, I guess, as all of our competitors have as well. From an Omnicom point of view, we've made great strides with the creation of Omni and earlier in the year when we acquired Flywheel, the commerce data that we've been able to put together. And that progresses, and today we're working even betaing all the generative AI possibilities to create tools for our folks. Philippe on the other side can talk to it as well because he's at a very strong bench.
Sure. I mean, I think to John's point, technology is playing so much more important a role in our sector, and that's because for our clients, the consumers they need to reach expect a high degree of personalization in the messaging they get, and a high degree of engagement in the experiences we deliver.
Yeah.
So to John's point, He brought Flywheel into the family. It's a company that has this quite distinctive ability to understand everything that's happening in the digital retail ecosystem down to the individual transaction level. And then for us, Axiom, as John said, is likely the largest consumer database outside of the walled gardens. So if you put those two together, and if we co-invest in generative AI, we're very, very strongly positioned, we believe, to help our clients navigate this tech-enabled world.
How does it strip out costs? You clearly identified opportunities for $750 million in annual cost savings, but the talent, when it comes to generative AI, is expensive. So, Philippe, how do you strip out those costs?
Well, I think John's been really clear, and I think we are fully in agreement a year in that it's about enabling the folks who interact with the clients, so those brilliant people, giving them more tools. There are ways in which we're not going to invest more than once, and we are going to look at infrastructure that is perhaps legacy infrastructure in businesses like ours. So there is a meaningful opportunity there to put the money against the future.
John, some of the concern may be being priced in at the moment because as combined market capitalizations, they're now lower than they were on Friday. People are trying to digest how this deal works. Citi, Bernstein saying the potential for revenue dis-synergy, rival agencies stealing accounts, talent. How do you make sure that people stay on board with you?
Sure. We've always been the place for the best talented people to come to. Naturally, there's churn in everybody's business every year. Fortunately or unfortunately, I've been through this movie once before, but did it badly and didn't complete it 10 years ago. This one is a lot more thoughtful.
You're referring to the Publicis deal back in 2014.
Yes. But clients who listen to us and see the capabilities that we've developed between us already, the power of what we're going to be able to continually bring to the marketplace, the changes in the focus and the single point of entry and investment that we're going to make to enable that talent to succeed. I'm not nearly as concerned as the naysayers who are looking for some way to knock on the deal, that we may be challenged by the odd client or two. I suspect not, because I think the offerings that we have and the response to those clients is at the core of what we've been discussing for the last year. And that's been first and foremost. So we've been focused on what is this going to mean for our clients? What is this going to mean for our talent? What is it going to mean for us attracting talent going forward and enabling those people? And most very talented people want to work with and for the very best and brightest and have available to them the most state-of-the-art tools. And that's what we'll be providing. And progress is every day. I mean, I haven't even focused in on what the advances that I'm very familiar with Sarah, but what was going on this morning.
OpenAI,
sorry, yeah. And that has a positive impact used as a tool made available to our knowledge workers.
Yeah.
And so others will try, some will succeed, but we'll wind up at the end of the day with the very best talent in the industry, I think, as we always have.
And Philippe, that talent wants to be enabled with the latest and greatest tools.
Absolutely.
John was, though, talking about how the barriers for entry were very low and now they've got higher. But generative AI makes the barrier to entry for new upstarts incredibly low. How, do you not believe in that?
I'm not sure that I would agree with that, because ultimately what you have to have is connectivity to a very, very broad range of capabilities. And so I think that if you're thinking about it in a very reductive sense and you're saying, well, anybody can create a piece of content, sure. But the reality is that unless that content is connected to a very sophisticated platform with a great deal of technology and a lot of data, then fundamentally it's not really very useful to the clients who need accountability, need outcomes, and are very sophisticated themselves.
We are, of course, speaking with Philippe Krakowski of Interpublic Group and John Wren of Omnicom. And John, going back to ultimately this pie that at the moment is being redistributed among new players, it's not just Meta and Alphabet. I mean, ByteDance is in there taking space, Amazon as well. Do you think ultimately the agencies, the four that become three, will own as much as the $1 trillion of the market that it does it today, or will that continue to erode?
Well, many of these players have been competitors of ours now for quite a while. I mean, so it's not new. some of the tools, some of the capabilities that are being created today, on one hand, be very welcome and usable by smaller marketers, but larger marketers, I defer to what Philippe was mentioning a minute ago, are going to have to be a bit, you have to bring brand safety into consideration as you do this. You have to bring in considerations, do you have the right to use your image and your voice in my next commercial, even though it might be a perfect setting for what I'm trying to accomplish. So there are a lot of considerations. Europe is different than the US. China's going to be different than everybody else. So that competitive set has always been out there. We, with the resources that we have, defending ourselves in this environment, have been very successful and will continue to be successful. We'll be more successful now because we'll be more focused and we'll have more resources to respond to things that change.
Things that change are like a new administration, Philippe. And everyone's been saying, what about the regulatory outlook? I mean, if you are, it's global jurisdictions here. How confident are you that this deal actually gets through?
Well, to John's point, it's been a long time in the making. We've been very deliberate. So you can assume that, you know, we took advice as we were heading into this, because to your point, we're going to be looking at a dozen or more jurisdictions in which this will need to clear that hurdle. And we have a high degree of confidence that that's something that we can achieve.
Do you have a high degree of confidence, John, just in your client, in the macro perspective that they currently have? How willing are people to commit to big campaigns in this macro environment, as we do have so much geopolitical uncertainty?
Sure. Clients still wake up in the morning and they're running their businesses and they're running their factories and they have to sell their products. Maybe the nature of what they're advertising or the channel in which they're trying to reach their customer change, but that's what we're best at, and the velocity of that change. And people will do different things to respond to the marketplace differently. I think the change in administration is probably a positive thing. I suspect the new administration is going to be more business-friendly than anyone's complained about the existing administration. So I'm not anticipating, and we've been well advised, that we have to go through the process. But there are a lot of competitors out there, so that won't be an issue in the final days. No, the whole focus is on the flexibility and the agility.
Right.
Even though people who want to tend to look at size and look at the negative aspects of size, we see size as empowering because it'll give us more resource. And what's key is to keep the agility and leave creativity to the talented people that we both have in our employ and are responsible for us both being here today, but enabling them with the best tools, cutting edge, so they can go into the largest advertisers in the world and with great confidence tell them that it's always changing. Nothing, yesterday doesn't exist anymore. It's what's tomorrow, but we're the place to come to.
Thanks for coming to us today. John Wren of Omnicom, and of course Philippe Krakowski of Interpublic Group. We appreciate it. Meanwhile, of course.
All right, that was Bloomberg Television's Caroline Hyde speaking with Omnicom CEO John Wren and Interpublic CEO Philippe Krakowski. Omnicom buying Interpublic yesterday in a all-stock deal, creating the largest ad agency platform on the planet, surpassing WPP Group. So a big deal in the advertising space. All right, let's get a quick reset here, then we'll get back to it. Let's check in with John Tucker and get a Bloomberg business flash. John, what do you got for us?
All right, guys. The major stock average is mixed ahead of the inflation reports this week. They may give us some clues about the future direction of rate cuts from the Fed's, which is meeting next week. CPI out tomorrow, followed by the Producer Price Index. Alphabet right now, best performing stock in the S&P 500. It talked about breakthroughs in quantum computing with its new Willow quantum chip. And Oracle reported quarterly revenue in line with estimates, but investors wanted more. Peter Shear at Economy Securities, meantime, has asked where he sees the S&P 500 headed.
It could go higher again, but I do think there's this potential for pullback. And I think, as it's been now for a while, is where do we stand on AI, the data center build-outs? And part of me is concerned, while this is going to be the future of the economy and the future of the country, does it look like fiber, where fiber was also going to be the future, and we overbuilt so much fiber too quickly?
Some of the other stocks in the move include C3 AI, the data analysis software company, saying quarterly revenue topped estimates. They also raised the full-year sales forecast. Alaska Air Group, which owns Alaska Air, and Hawaiian Airlines, laying out plans for a dramatic global expansion while boosting its profit forecast. Right now, the S&P 500 down a point. The Dow up 27. The NASDAQ 100 is 24 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
Thank you so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries worldwide. And once a week, we tap the great resource that is Bloomberg NEF. They basically give you all the tools to track the energy transition. They look at commodities, power, transport, industry, building, ag sectors, you name it. They cover it. A big portion of what they cover is the carbon market, a key part to transforming the energy landscape. So joining us now for more is Bo Chin, a lead U.S. carbon analyst for Bloomberg BNEF. For the U.S. carbon market, how bifurcated is it?
Yeah, U.S. carbon market is now going through ups and downs. So this year has been super exciting year for U.S. carbon markets. We have hit record highs. The most interesting carbon markets in U.S. are on the coast. So we have on the west coast, California, linked with Quebec. And then on the east coast, we have Regional Greenhouse Gas Initiative, which is the power sector-specific carbon market focused on 10 states. Both of these markets have seen price records. So looking at just West Coast, the California carbon price went up 40% since 2023, hitting a record $44 per ton. And we have seen these prices actually, unfortunately, this year come down 30% this year. And this is because of the reforms that have been proposed and also the delays of these reforms. On the East Coast, we have a similar story. So it was a very bullish story up till September, with prices moving up 70% to $28 per short ton. And then prices have since also come down 25% because of the reforms. But we do expect next year to be a very exciting year as these reforms get concluded and we see more policy certainty within these markets.
Okay. Explain it to me like I'm a 5-year-old. What drives the price of carbon?
I was going to ask that too, actually.
Okay.
Yeah, carbon markets really is like...
Is it a commodity?
Yeah, definitely.
Okay, it's commodity, so supply and demand.
Yeah,
okay,
it's supply
so I got
demand. It's basically, you can think it as a farmer's market where polluters go to buy permits and then abaters go to sell their permits. It depends how big family you're feeding, how much demand is for that abatement, then that drives the price. In our world, we call that demand and the price is a marginal abatement cost curve. So if you have a strong demand or a strong climate ambition and a very limited marginal abatement cost curve, that would lead to a high carbon price. And then vice versa, if you have low demand or low climate action and a very significant marginal abatement cost curve, meaning that you have cheap abatement and a vast amount of it, then you would have typically a lower carbon price.
So to me also, the idea with the carbon price is if you get it high enough, then companies are going to want to like store their carbon because they're going to be able to then trade that credit and get money for it, right? So the higher it is, the better it is for the environment because companies will be more incentivized to store their carbon or not produce it or to sell it, right?
Yeah.
But what is that price?
It really depends on the supply and demand as it's a commodity.
But like, are we talking about like $80 would really be a good incentive? Is it $100? I mean, any commodity is going to have that incentive price.
Yeah, exactly. It depends on what technology you're looking at. What is the trigger point? Trigger price. So if you look, we typically say that the cheapest is the coal to gas fuel switching, and that also depends on the market. So in Europe, that typically is higher than US, where gas is already very low. We also looked into this that not only power sector now is the ones that are being triggered, but also transport, where you tilt from ICE vehicle to an EV, and a carbon price can help you to do that. And also carbon price doesn't work alone, so there's a lot of complementary policies. We're pretty much the final defense. So if other complementary policies didn't deliver the results we wanted to see, then carbon price can do the final lift, hopefully.
All right. Oh, so go ahead.
Oh, I was just saying that essentially carbon price is really the best tool to provide transparency to energy transition and provide that price signal so people and companies can change their business strategies and investment strategies really as well to fit the future.
Interesting. So real quickly, change in administrations coming up. What does that mean for your world?
Yeah, it's really exciting actually for us. Maybe for the clean energy sector, it's maybe not such positive news as potentially some subsidies like Inflation Reduction Act and other complementary policies for renewables and clean transport will be now reduced, and there'll be more support for oil and gas industry. But for carbon market, this could be a good thing because we would have more emissions that would support carbon prices, but also a lot of states could now really double down on a carbon market as a policy tool to support prices. Also for investors, carbon price could become an attractive tool to invest because naturally carbon markets, particularly those compliance carbon markets, can hedge inflation, which could become a topic now with the immigration rules and tariffs being changed with the new administration.
Quickly, is it a bad thing that it's so fragmented?
Yes.
Do we ever get to a place where there's like a U.S. carbon price?
We do hope so. For U.S. National level carbon price, it will most likely not become a realistic thing in the next few years, but we could see more states linking. Like even right now, we are seeing that Washington, which survived the repeal ballot actually in November as well, so now there's more opportunity for Washington state to be linked with California. There are also other states that are talking about having a compliance carbon market, actually right here in New York. Okay. Very excited about Nikki. I'm excited to make the son of Mickey to become a hey Nikki. So New York is going to be economy-wide, and it's going to be similar size to California. Okay. So if these all get linked, then we could have a maybe not an official national, but a benchmark price.
All right, Bo, really appreciate Bo-Chin joining us from Bloomberg BNEF. She's U.S. carbon analyst joining us there. Really interesting stuff as we head towards next year. Coming up, Todd Gillespie is a Bloomberg finance reporter, Bloomberg Big Take Story. It's all about Citi and Jane Fraser. She's about halfway through her 5-year transition plan. Plus, stay tuned with us because tomorrow at 10:30 a.m., Bloomberg's David Gura will be interviewing U.S. Treasury Secretary Janet Yellen. It's a must-listen and must-watch.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. You know we love these big take stories, man. Every day Bloomberg News comes out with these stories that are really interesting topics, number one. Number two, really deeply reported, sourced, all that kind of good stuff. They got a lot of great graphics for me to make it nice and simple. Today's a really good one because it's right down in my wheelhouse here. Talking about Citibank, what Citi, I guess, is now. Jane Fraser, the CEO, trying to turn this behemoth around. I mean, way back in the day, I used to work at Citi because they kind of acquired us when I was at Salomon Brothers. So, and quite frankly, they saved us when we were at Salomon Brothers. We would have traded ourselves right out of existence there. So we appreciate that. Todd Gillespie joins us here, finance reporter for Bloomberg News, with the big take story here. I'm looking at Citi. The stock's up 41% year to date, 52-week high. I think the CEO's Jane Fraser's doing a good job. What did your reporting find?
Yeah, that's right. But I mean, some people are pretty optimistic, some others not so much. I mean, banks, generally speaking, as a sector, have done really well this year. You know, Citi's kind of sitting middle of the pack of the top 6 major U.S. banks. So they're doing okay. You know, Mark Mason, the CFO, just said this morning at a Goldman Sachs conference that the bank is set to hit the top end of its revenue guidance for the end of this year. So after years of disappointing people, you know, investors, analysts slowly maybe starting to think that she can turn this ship around. But it's a huge task.
Why is the ship so big and why is it so hard to turn?
Well, Citigroup was once, before the financial crisis, the world's largest financial company. It was the U.S.'s largest bank. This is a company that is probably the most global bank in the world. It's the only bank, for instance, that has a significant presence in Lebanon, where it had to evacuate staff earlier this year. We reported that earlier this year. And so it's one of those banks that is so sprawling, which is one of its advantages, because it gets, it enables it to have this incredible global network of payment systems and M&A advice and experts in all sorts of different countries, but it's also a big hindrance. And one of the things that Jane Fraser has tried to do is exit 13 of its retail markets where it has retail banking presence. It's about to IPO its retail business in Mexico by 2026. So it's really kind of trying to straighten, downsize in the right ways, she's saying, and also increase its fee businesses like wealth management and banking as well.
What does Citi want to be when it grows up? Does it want to be J.P. Morgan? Is that the aspiration for Citi, or do they have a different strategy?
I mean, it's hard to compare, but yeah, I mean, I'd probably say J.P. Morgan is Bank of. I mean, I'd say small steps. I think Bank of America, the way that Bank of America came out of the financial crisis was something that Citi could have only hoped to emulate. Right? Citi has really been a laggard since the financial crisis, in a way that Bank of America was able to suddenly turn that ship around fairly strongly, and Citi is only just managing to maybe start do that. It has a very large services business, payment system, just like JP Morgan. Its banking business has been traditionally one of the smaller on the M&A side, but larger on the DCM and ECM side. So it's trying to see if it can kind of even out those businesses as well. It's unclear. I mean, maybe if Jamie Dimon had stayed at Citigroup back in the day, it would have had a very different trajectory.
In talking to shareholders and talking to analysts, what's the vibe on Jane Fraser? Like, is she doing a good job? I realize it's only halfway through, but what's the confidence level? Yeah, well, she's past halfway through now. I mean, she set out these targets in March 2022. She says that by the end of 2026, she can get to a return on tangible common equity of 11 to 12%. They're sitting rather unhappily just under 7% right now, which is one of the key metrics that investors and analysts are quite unhappy with, to be honest. But people like her as a CEO. People respect her. She's pretty forthright. She's got empathy. Regulators. Folks. I think people like dealing with her as a person. But obviously, when you take a bank through this massive change, they announced 20,000 job cuts at the beginning of this year, 9,000 of those still to go in the next 2 years. You're obviously going to have enemies and people who really don't like the way that you're moving this thing around.
What's next for Citi in their turnaround plan? Is there a milepost that Investors are saying, boy, this is the next thing we need to see.
The next thing everyone needs to see is positive operating leverage that really consistently comes through. That's revenues outpacing growth in revenues outpacing expenses for them in the next 12 months. And they also really want to see strong growth towards that ROTC, that returns target, every quarter by quarter. And that's the kind of consistency that Citi has lacked for the past decade, that Jane Fraser is really trying to bring back to the business and show investors that they can believe the targets that she and her CFO, Mark Mason, set out and actually stick to those, so that they have that confidence in the market, that they can get rid of those regulatory burdens that have kneecapped them for so long, and that Citi can really come out of this stronger, more streamlined, and finally, put behind it this bloat that has really weighed it down.
You also mentioned, about 30 seconds, in the piece about how they do good numbers, they deliver good numbers, they don't get the credit for it in earnings. What's up with that?
Totally. I mean, every quarter, if they post strong revenues, it's the ROTC number that's not quite right. If the ROTC number is good, it's revenues that aren't quite right, or it's something like that. These are often battles, really, on earnings calls. These are longer earnings calls than most banks have, and you can really listen to those yourself. They do get quite colorful and quite lengthy, so you need to have an extra shot of espresso while they're going through.
No problem. I'm all for that. But it's expensive now because of the whole Arabica thing.
Collapse.
All right, Todd, thanks a lot.
Coffee prices. There you go.
Joining us.
Thanks,
Bloomberg
guys.
News, great big take story. You can check it out on Bloomberg.com/big take, or check it out on the terminal as well. Gotta say, these markets, snooze fest for
That's
you.
okay. I'll snooze right into year end and take my 26% S&P 500 gain with me.
I mean, yeah, but 28% there. You do have an auction, the 3-year, but I'm trying to pump it up. Could be cool. Wraps it up for me and Paul. Balance of Power with Joe Matthew is up next after this global news update. Happy Tuesday.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. It's a dangerous situation in and around Malibu, California, where strong winds are fueling a fast-moving brush fire. Fire Chief Anthony Maroney.
The fire is currently estimated at over 2,200 acres. We have only a minimal number of homes destroyed. This fire is not contained.
Thousands of people have fled their homes. CBS's Jonathan Vigliotti on the situation at a major university.
Pepperdine was threatened for a period of time. The power was cut off. Students were told to shelter in place. The good news here, fire crews surrounded that area. They seem to have a control on the fire there. With that said, classes have been canceled today.
The suspect in the shooting death of the United Healthcare CEO has been charged with second-degree murder in New York. Luigi Mangione remains in Altoona, Pennsylvania, where he was arrested. CBS's Lilia Luciano.
I heard today from Altoona police that they are receiving death threats against the officers who made this arrest and against the agency, as well as other kinds of threats and messages of support for the shooter.
Officials say in a 3-page handwritten note, Mangione rants against corporations for abusing the U.S. for, quote, immense profit. Now to Israel, where CBS's Deborah Patta says it was a day of testimony for Israeli Prime Minister Netanyahu at his corruption trial.
Benjamin Netanyahu has taken the stand. In a nutshell, Netanyahu is accused of corruption and bribery, but he denied any wrongdoing. Although it's definitely a low point in his decades-long political career, his critics say he's obsessed with his image, and this will stand in stark contrast to his desperation, really, to be seen as a respected international statesman.
In Egypt, at least 8 people were killed in a building collapse in Cairo.
Rescue operations went on through the night, with officials still trying to determine whether anyone remains missing. A local official says that the 1961 building had been the subject of at least 8 repair and restoration orders in the past 2 decades, but residents kept appealing the decisions and they were never implemented. Vicki Barker, CBS News, London.
As we hear from CBS's Jim Crisula, some lawyers in this country now find themselves on the other side of the law.
2 New Orleans law firms have been charged with staging traffic accidents, faking injuries, and collecting millions of dollars in lawsuit settlements. Megan Kiefer is a personal injury lawyer not involved in the case.
We don't even know the depths of how many millions of dollars have been wasted.
The law firms allegedly paid people who staged accidents known as slammers to intentionally run into tractor-trailer trucks.
And checking Wall Street, right now the Dow is up 1 point. This is CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
10 days until we run out of money. Welcome to the fastest show in politics as we count down to a funding deadline on Capitol Hill with no deal yet. Yes, it's a new day, and we'll look at the menu of options in just a moment with Bloomberg's Mike Dorning, who's also tracking the transition on the Hill. This is a busy one for meetings. We'll have the latest on Pete Hegseth, Tulsi Gabbard, and even RFK Jr. With analysis today from our signature panel, Rick Davis, Jeannie Shanzano, Bloomberg Politics contributors are with us for the duration. And we start, as always, with a look at Wall Street. Let's get to the markets first with Charlie Pellet at World Headquarters in New York. Charlie, what do you have?
Good day, Joe. Matthew, indeed looking at small moves for the U.S. equity market, but in the red right now. Last update, we told you stocks were higher, but right now we have got the S&P lower, little change, down now by just about half a point. The Dow lower by 10 points now, giving up earlier gains. NASDAQ holding on to a 24-point gain right now. We've got the NASDAQ Composite Index up by about 0.1%. 10-year yield, 4.23%, with a 2-year, 4.16%. Gold up $31 the ounce, up 1.2%, $26.92 on the precious metal, while West Texas Intermediate crude up 0.8%, $68.94 a barrel on WTI. Bitcoin continuing to slump, now at 95,000, down by 1.9%. Next up for Wall Street, the CPI report tomorrow morning, 8:30 a.m. Wall Street time. Emily Rowland is co-chief investment strategist at JH Investments, and on surveillance this morning, she said when it comes to inflation, you got to keep an eye on policies from the incoming administration.
We may have just given inflation a bit of a shot in the arm with the potential for more pro-cyclical policies, potential for tax cuts, potential. I know we have to keep hedging this, but it's not exactly what we would want going into year end to see inflation surprise on the upside and cause a wrench in the narrative as it relates to the Fed.
Emily Rowland out of JH Investments. You can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcast. Oracle shares, they are now slumping 7.8% after last night's earnings report. Again, recapping U.S. stocks right now, little changed on the S&P, swinging between gains and losses, up now by just about half a point. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host with the Tuesday edition. Here he is, Joe Matthew.
Yes, Charlie Pellet reminding us it's just Tuesday. We packed it a lot yesterday. I thought maybe you just have to check sometimes before you sign the check. I'm Joe Matthew in the nation's capital. Good to see you. Tuesday, yes, edition of Balance of Power, the fastest show in politics here on Bloomberg Radio, on the satellite radio, and on YouTube. Find us now on YouTube by searching Bloomberg Business News Live. We'll be off to the races again for another couple of hours here with news, well, kind of, on this funding deadline that's approaching. So here we are, 10 days out, right? The government runs out of money on the 20th of December. I've been talking about this every day for weeks. Nothing's changed, really, in terms of a deal to avoid this. Yet no one's talking about a shutdown. We're just going to drag this thing, I guess, right to the last minute. But we do have a sense of what the next Congress is going to be doing when it comes to the sequence of dealing with the border, dealing with the Trump-era tax cuts, and that's where we start our conversation today with Mike Dorning, Bloomberg Deputy Congressional Editor. Has been covering this for some time. Mike, it's good to see you. Welcome
Great
back,
to be here.
as always. So I want to pick through a couple of these. Let's just start with the funding deadline. CR till mid-March is what everyone's talking about. Why don't we just get to it?
Well, there's a couple of things that are outstanding, but most importantly is the size of the disaster aid.
Okay.
And here you have several problems cross-cutting, and it makes it hard to work out something within the House Republicans.
This is emergency funding to respond to the two big hurricanes.
Yes, and also some of it going back to the Maui disaster.
That's right.
On the one hand, you don't really want to risk that people aren't going to have the money to keep working on the disaster aid in North Carolina and South Carolina and Hawaii and California, lots of other places there have been disasters. On the other hand, you have, number one, a conservative group within the House Republicans that always wants to pay for this by cutting other things, that says, hey, you know, we always have disasters, so you should be cutting something else, not just adding to the pot. And then you also have people fighting over how much money there should be in disaster aid. So that's the main thing that's the sticking point, the tension over how much money to give to disasters aid and whether you should pay for it or not. They're not going to pay for it in the end. That's just like something you have to get past.
Where that goes.
But the size of it will be the main holdup. You can also use that as a carrot later on by not funding it enough, so that when you need to get the next thing through, the North Carolina, South Carolina, California, Hawaii people are all like, I got to vote for this because I can't cut off my constituents.
So you have done this before.
Yes.
NDAA, I'll ask you about funding the government in the new year and so forth. And by the way, are we going with March? Is that the CR? We'll fund this till March, kick the can.
We'll see. It'll be somewhere soon.
The annual defense authorization. We hear every year it's must pass. Looks like this will pass. We got top lines over the weekend. But really interesting that there's a 14% pay raise for junior enlisted troops. Nobody can vote against that, right?
Yeah, the problem is it's getting caught up in other things. You would think that it would get through, but they've got, on the one hand, they want to do some things that with transgender troops that make progressives unhappy. There's some things that some of the conservatives feel like they want more things. They want like restrictions on abortion and travel for abortion and things like that. So you can lose those things. My guess is one way or another, whether you do the NDAA or you do some other stripped down thing, those troops will get that raise reasonably soon, because like everyone believes the junior enlisted troops need a raise. I mean, some of them are on food stamps. It's like, these are people who are defending the country. Sure. Maybe they should make a decent living.
Well, that's quite a sweetener there if you're on the fence about all of this. To the transition, then, the two words that seemed to change the world for Pete Hegseth were good conversations. Joni Ernst, with a fairly benign statement, but many folks thought she might sink his nomination. Her concerns over sexual assault in the military, her experience as a woman serving in combat. But boy, things have changed a lot this week. Everybody woke up on Monday following the Ernst statement and knowing there'd be a meeting and hearing Donald Trump on Meet the Press. Said, wait a minute, maybe this guy actually makes the grade.
And she kind of revived that nomination a little yesterday.
Yeah.
He was definitely gasping for breath there. Two things happened over the weekend, or late last week and over the weekend. Number one, she had kind of been completely non-committal, given him a very polite, cold shoulder, and clearly was hoping that he would just die and Trump would withdraw it. But Trump moved in, supported him some, and then conservatives came in hard on her and said, you know, you don't do more to support him, we'll challenge you in your primary in 2 years. Now, she hasn't said she'll support him, but she said some kind words, positive vibes. And in Washington, that can be crucial because he just needs to make it to the next week. And without some sort of kind vibes, it was looking like he might not. And you live to fight another day, you could win.
Huge pressure campaign for Joni Ernst in this case. So you start to pull out the lens a little bit. Tulsi Gabbard being pretty well received yesterday on Capitol Hill, starting to answer questions about Syria and so forth, reminding people she has a top secret security clearance and was promoted.
Top secret is not that high a security clearance, just so you know.
But had that since her visit to Syria in 2017. I don't have one of those. And then there's RFK Jr., who's going to be holding meetings next week, we're reading now on the Hill. Will start his meetings. Is there a world in which all three of these controversial nominees, initially seen as controversial, are in fact confirmed?
Yeah, there's definitely a world where all three are confirmed. It's quite possible. I still think Hegseth is probably in the most danger of those three because the disagreements with Tulsi Gabbard and RFK Jr. are kind of policy-oriented. They may be very basic policy, you know. She was seemed to be supportive of the Assad regime and Russia.
Not the personal challenges we're dealing
but
with.
like Hegseth, the personal challenges are of easy to understand for everyday Americans and salacious, you know, allegations of rape, you know, drunkenness, financial mismanagement. That's something that like tends to be more of a wildfire in the press and people talk about it. You might agree or disagree with RFK Jr.'s sort of unorthodox views about vaccines or Tulsi's views about intervention abroad and foreign governments, but they're not like the thing that like excites people as much.
Well, it's really interesting. At the same time, maybe ask this slightly differently. Let's say they all get to their confirmation hearings. What kind of a show are Democrats going to put on here? Even if they are confirmed, these could be some very difficult and personal questions posed to Pete Hegseth. It could be for RFK Jr. as well. His history with drugs, his past comments, allegations again of sexual advances that, you know, might not play too well publicly. What are Democrats prepared to do in terms of making a stink about any of these people?
I would imagine they are going to make a huge stink about all three of these people. And the important thing is each of these people are now being introduced to the American people. These impressions, where our parents told us, first impressions matter, look someone in the eye, shake them in the hand, shake their hand. These will set the public impressions of these high-profile people. And in those confirmation hearings, I would be very surprised if you don't see Democrats pushing the allegations against Pete Hegseth, the sexual misconduct ones. I would be very surprised if you don't see a strong effort to characterize Tulsi Gabbard as, you know, a potential national security risk, and RFK Jr., his unorthodox views about health and vaccines, and frame them for the American people, whether they get approved or not, a different question, and Democrats essentially can be outvoted. The question is, some of them, there might be some Republicans who also don't want to go along with them.
Yeah, exactly. And of course, it'll all be aired out in public, even if they do make the grade. Some damage could be done here.
It's not just the confirmation hearings;
right.
it's all the debate going
That's
up
right.
until
Absolutely.
then.
We have weeks until we're at the point of getting a vote. Mike, thank you so much. Mike Dorning covering the transition for us and the funding deadline in Washington. We're 10 days out. We'll get this figured out at some point, and of course, you'll hear about it right here on Balance of Power. Rick and Jeannie are on the way in next. Our panel's up early today on Bloomberg.